Let's start with one of the biggest institutional moves this month. Goldman Sachs has officially filed for its first Bitcoin ETF, aiming for a potential launch as early as June 2026. The product is designed to combine Bitcoin exposure with income strategies using options, marking a more advanced approach than standard spot ETFs. At the time of the filing, Bitcoin was trading around $74,000 to $75,000 after briefly touching levels close to $76,000 before pulling back. This is not just another ETF. Goldman Sachs entering the space signals continued institutional commitment at scale, especially after months of mixed flows. It also shows that traditional finance is no longer experimenting with crypto, it is actively building structured products around it. And important, this comes at a time when ETF flows are turning positive again. Bitcoin ETFs have recently recorded over $1.3 billion in inflows, marking a strong reversal after several months of outflows. BlackRock and Fidelity products continue to dominate, absorbing the majority of institutional demand. This suggests that despite short-term volatility, large players are still accumulating exposure to Bitcoin. And this ties directly into what we're seeing on price charts. Bitcoin recently pushed towards $76,000 before pulling back to the $74,000 range. Daily moves showed gains of over 5%, with Ethereum outperforming at over 8% in the same period, trading around $2,300. At the same time, total crypto market capitalization sits near $2.6 trillion, with over $531 million in liquidations during recent volatility. This tells us one thing clearly: the market is active but still unstable. Looking at market structure, the Ethereum to BTC ratio has started to rebound from recent lows. This could signal early stages of capital rotation into altcoins, a typical pattern during mid-cycle phases. However, not all altcoins are following yet. Assets like Solana and Cardano, Dogecoin are still under pressure, suggesting that we're not fully in a risk-on environment. For now, it's selective strength rather than a broad altcoin rally. Now let's move to a real-world adoption. And this is where things get interesting. Bybit has introduced stock trading using crypto as collateral, allowing users to trade assets like Apple, Amazon, and even crypto ETFs using Bitcoin and Ethereum. The platform added 44 new instruments, bringing the total to over 130. Bybit now serves around 80 million users, and Bitcoin is valued at roughly 98% of its collateral value within the system. This is a major shift. Crypto is no longer just a speculative asset, it is becoming functional collateral in hybrid financial systems. At the same time, Bitcoin's supply on exchanges has dropped to around 2.3 million coins. That's the lowest level in over 7 years. Less supply on exchanges typically means reduced selling pressure, which historically has supported price growth over time. Institutional expansion continues beyond ETFs. Deutsche Börse has invested $200 million into Kraken's parent company, Payward. This is another example of traditional financial giants entering crypto infrastructure, not just trading it. We're seeing a clear trend. TradFi is not competing with crypto anymore, it is integrating with it. But with growth comes risk. In Q1 2026 alone, Web3 projects lost approximately $482 million across 44 separate incidents. Phishing attacks accounted for around $306 million of those losses. Security remains one of the biggest unresolved challenges in this space, especially as adoption grows. Finally, macro conditions are starting to matter again. Oil prices have moved above $100 per barrel amid geopolitical tensions, while global markets are showing signs of risk-off sentiment. Bitcoin has been trading in the $70,000 to $75,000 range during this period, showing relative strength but still reacting to broader market conditions. Overall, this was a week of strong institutional signals. Goldman Sachs entering the ETF race, over $1.3 billion flowing back into Bitcoin ETFs, and major investments like Deutsche Börse's $200 million move into crypto infrastructure. At the same time, adoption is accelerating, with platforms like Bybit connecting crypto directly to traditional markets. Short term, the market remains volatile and sensitive to macro factors, but the long term, the integration between crypto and traditional finance is clearly accelerating. That's today's Kanga Crypto news. If you enjoyed this episode, don't forget to like, subscribe, and stay tuned. See you next time.